Hi, this is Kyle Markham with International Futures Group in Chicago, a division of EFG Group. Today I want to do a little bit of soybean commentary for Wednesday, February the 25th. Obviously it's been pretty active over there. We're going to start with yesterday. Realize this is a news-hungry market. It's been a while since we've had anything significant to talk about, and yesterday it seemed that we got that. Most people attributed the significant 30-cent move to the upside to be on the heels of the Brazilian trucker strike. First thing I want to say is certainly this shouldn't be a surprise, and secondarily, this happens, it seems like, every year. And I hate to even jinx it, but are we going to be looking at a port strike down the line as well? These are things we just have to deal with. What was interesting to me about yesterday's move is the volume. In the May contract, we traded 212,000 contracts. That's a pretty big move, and the market had really been lacking volume like that for some time. What's interesting is a lot of people right away attributed it to some fund buying. I think it was also a technical event. I mean, we hadn't been to these levels in a number of weeks. We did break out of those recent highs, did it with some conviction, but it was interesting as well how quickly we faded from those levels, and by the end of the day, you were already 15 off the high in the soybeans. Realized the evening before, which was Monday evening, we had that March-May meal spread just continuing to squeeze higher. Obviously $12 is the level that we had spiked to weeks before, traded all the way up to I think $11.70. That seemed to predicate the soybean move, and then before you know it, March meal is up 10 or over double-digit gains on the day. Realize this first notice day. Realize this is a pretty consistent theme as far as that shenanigans that go on as we get towards the end of that contract. And whenever you see those meal spreads screaming like that, you got to kind of anticipate it. Looking at today's action, I thought it was a pretty undecided trade. Early weakness. The market goes into the biscuit break. We reopen straight to the highs, new highs. Before you know it, we're down on the day and making new lows. Peculiar, we only did 121,000 contracts in May today, so effectively, basically half of yesterday's volume. So seemed like a bit of a digestive type trade. One of the things I'm going to key off of for tomorrow, I realize it's exports, but when you look at today's lows at 10.04 3/4 in the May contract, yesterday's lows were 10.01. So if we take out 10.01 now, that's going to mean that every single last long from Tuesday is going to be underwater. And then, the wires were reporting that the funds were back in there selling off some beans today. So it's going to continue to be a push and pull. The market's looking for news, and we got some. The market spiked, and realized people are fundamentally, a lot of people, bearish on soybeans just because of carryout and because of how much is going to come out of South America. And you see a short cover like this combined with fund buying, etc. So watch that $10 level in the May contract. We do have exports tomorrow, so oftentimes we do see a bit of a bounce for that. The only other thing you saw yesterday was a little bit of that conspiracy theorist commentary as far as it being the end of the crop insurance month. The USDA's got us at 200,000 less acres. I said last time, I don't think anybody believes that. I certainly don't. And all of a sudden, soybeans are at $10. Of course, we rejected that level and headed lower. Problem with November, there's a long way until we get this crop in the ground. Who knows what the weather's going to be, but more importantly, who knows what these acres are going to be. So moving forward, I would expect a continuation of the chop going into the end of the week. $10 is a level to watch to the downside in the May contract. Realize that will be a 32-cent break off the highs, and we'll get to find out. As much as we squeeze the shorts in the recent move, let's see what kind of tenacity the longs have if we start to see downside pressure underneath $10. So that's all we have for today. Again, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Don't hesitate to give us a call if you have any questions. Thanks.